ELSS mutual funds can give you higher returns and also save taxes, which means एक तीर से दो निशाने और उर्कलले रेंड मांगा. Wow, right? Yes, so in this video I will be telling about those mutual funds, so don't miss out and watch this video till the end, friends. Hello guys, my name is Karthik. I am a chartered accountant by profession, YouTuber by passion, and I make informative videos every week on various topics under the commerce, on finance, stock market, etc. So do check out our channel if you are visiting for the first time. And with that, let's dive into the today's video. So friends, I have taken 5 good ELSS tax saver mutual funds for today's video. ELSS means equity linked savings scheme, right? So first I will talk about the performance of those mutual funds, like what is the returns and what is the NAV and all those things, and then later I will tell you about the tax benefits which you will get if you invest in this mutual funds, right? Okay, so the first mutual fund or the 5 mutual funds which I am going to talk is, the first one is Quant Tax Plan. Second one is IDFC Tax Advantage. Third one is Canara Robeco Equity Tax Saver Fund. Fourth one is Mire Tax Saver Fund. And the fifth one is DSP Tax Saver Fund. Okay, so these are the 5 good mutual funds which I have taken for today's video and analysis, right? Now let us look at the returns, what these mutual funds have given over the last 1 year, 3 years and last 5 years. And these returns are as on 13th of April 2022. Okay, so first let us take the Quant Tax Plan. If you see, this Quant mutual fund has given 49% CAGR returns for the last 1 year, 38% returns for last 3 years, and 26% returns for the last 5 years. Then if we take the IDFC Tax Advantage Fund, it has given 35% returns for last 1 year, 22% returns for last 3 years, and 18% returns for last 5 years. Then if we go to the Canara Robeco, it has given 25, 22 and 18% returns for last 1, 3 and 5 years. Then if we see the Mire Tax Saver Fund, it has given 26, 23, 20% returns for last 1, 3 and 5 years. And then finally DSP has given 27, 21, 16% returns for last 1, 3 and 5 years. So if you see, amazing returns, very handsome returns given by these mutual funds, and over and above you will get the tax benefits also, which I will be telling in the later part of this video. So let us now look at another important metric of this mutual fund, which is the assets under management, AUM, which is nothing but the total market value of all the shares in which these mutual funds have invested. Okay, and this AUM is as on 13th of April 2022. So if you see, Quant has AUM of 1166 crores, IDFC has 3428 crores, Canara Robeco 3586 crores, Mire 11790 crores, DSP has 9872 crores as assets under management. So these are having good assets under management, decent, okay, and Mire is having huge, and also DSP, but all others are all very good, decent AUM, right? Now let us look at the NAV, net asset value. That is, what is the value which you will have to pay if you were to buy these mutual funds, right? And this NAV is as on 13th of April 2022 and is for the direct plans, right? So for Quant, the NAV is 254. I'm not telling the the decimal, friend. I'm just rounding off the all the numbers, even the returns and AUM and NAV. I'm just rounded off. Okay. So Quant, the NAV is 254 rupees. IDFC is 111. Canara Robeco is 122. Mire is 34. DSP is 88. So 254, 111, 122. 34, 88. These are the NAVs of this mutual fund. So if you see, NAV is very much normal, affordable NAV, not very high, right? Now let us look at the expense ratio of these mutual funds, right? And this expense ratio is also for direct plans, right? What is expense ratio for Quant is 0.58%, IDFC 0.81, Canara Robeco 0.69, Mire 0.60 and DSP 0.80. So expense ratio is very less, I would say very nominal, not very high also, very nominal this is. So it's a, I would say again, good amount, okay, good indicator. And then now let us look at the minimum amount which you need to invest if you want to start investing in this mutual fund. And it is just 500 rupees, friends. Just 500 rupees for all these mutual funds. With 500 rupees, you can start your, investment in this mutual funds, right? So again, a very good, for all the middle class people, even for lower income group or middle income group also, this is amazing, right? Now let us look at the launch date. All these mutual funds, were launched in the year January 2013, okay, except Mire Tax Saver Fund, which was launched in November 2015. Except for Mire, which was launched in November 2015, all other 4 were launched in January 2013. You can check out the slide here. So these are good. They are there in the market for 8 to 9 years. So they have established track record. So that is another good thing. And the exit load for these mutual funds is nil. So when you exit, you don't have to pay any commission or percentage when you do the mutual funds, right? But one important thing which you have to keep in mind, friends, which is very, very important, is that there is a lock-in period. And there is a lock-in period of 3 years which you have to have it if you invest in this mutual funds. Which means if you invest in mutual funds, some say 10,000 rupees today, then for 3 years you cannot withdraw that money. After 3 years only you can withdraw that money from the mutual fund. So there is a lock-in period of 3 years because it gives you tax advantage, and hence this lock-in period has been kept as 3 years. So that is one important thing which you should keep in mind. But overall, if you see, friends, good indicators, everything is good for this mutual funds. So now let us look at the mutual funds holdings. That is, what are the shares of the companies in which these mutual funds have invested, and what is the percentage of their investment in the various companies. And friends, for the purpose of this video, I'm just giving you the top 7 investments made by these mutual funds, and not all the investments. For all the investments, you can check out the description wherein I have given links wherein you can find all the shares in which they have invested. For this video, I'm giving you top 7 companies in which they have invested. Okay, let us start with Quant Mutual Fund. Quant has invested in Vedanta 8.4%, ITC 7.7%, SBI 7.6%, L&T 7.1%, Adani Enterprises 6.5%, Adani Ports and SEZ 6.2%, and ICICI Bank 6.2%. So overall, these 7 companies together come to 50%, and balance 50% they have invested in shares of other companies, for which you can check out the links given in the description to know the list of all companies, right? Then if you go to IDFC Mutual Fund, it has invested in ICICI Bank 8%, Infosys 7%, SBI 4.9%, HDFC Bank 4%, Reliance 3.8%, Tata Motors 3.7%, and then a tri-party repo 4.7%, totally 36%. Okay, and balance 64% in other shares. Then if you go to Canara Robeco, it has invested in Infosys 8.62%, HDFC Bank 6.84%, ICICI Bank 6.69%, Reliance 5.28%, TCS 3.48%, Bajaj Finance 3.45%, L&T 2.83%, totally 37%, and balance 63% in shares of other companies. Okay, then Mire has invested in Infosys 7.54%, HDFC Bank 7.15%, ICICI Bank 6.65%, Reliance 6.65%, Axis Bank 4.25%, SBI 3.51%, TCS 2.75%, totally 39%, balance 61% in other shares. And then finally, we'll go to the DSP, which has invested in ICICI Bank 9.01%, Infosys 8.49%, HDFC 7.29%, Axis 6.67%, SBI 4.74%, SBI Life Insurance 2.80%, and Airtel 2.69%, totally 42%, balance 58% in shares of other companies. So now let us look at the tax savings. What are tax savings which you will get if you invest in this ELSS mutual funds, friends? Okay, so if you see, friends, as per section 80C of the Income Tax Act, if you will get a deduction of up to 1,50,000 rupees from your gross total income. When you will get this deduction, if you invest in various financial products such as fixed deposits, public provident fund, etc. So in that, one of the financial products is also ELSS tax saver mutual funds, right? So, and out of all these financial products which I have told you, the best financial products when it comes to the returns is the ELSS mutual funds, right? So if you see, so the amount which you invest in ELSS mutual funds is eligible for deductions from your total income, okay, for a maximum of 1,50,000 rupees. That is, if you invest 1 lakh rupees in ELSS mutual funds, then you will get 1 lakh as a deduction from your gross total income. Okay, if your gross total income is 10 lakhs, if you invest 1 lakh in ELSS mutual funds, your net income will be 10 minus 1, 9 lakhs, right? But if you invest 2 lakh rupees in ELSS mutual funds, then your deduction will only be allowed as 1,50,000. Okay, so the upper limit for deduction is only 1,50,000 rupees under section 80C, right? And this deduction is available only for the year in which you make the investment in mutual funds, friends. Okay, and not for the entire lock-in period of 3 years, right? This is very important because a lot of people get confused that with the lock-in period, and they start assuming that lock-in period is also 3 years, so they will also get the deduction for the 3 years in the for the income tax act. No, okay, that is not the case. If you invest in 1 year, you will get deduction only for that year. But if you want deduction in the next year, then you have to again invest 1 lakh rupees or whatever amount which you want to get deduction. So again you have to invest in that year also to get the deduction in that year, right? So I hope you keep this point in mind. And how much tax can you save by investing in these mutual funds? I will just give you one simple example. Assume you have invested full amount 1,50,000 rupees in a year, right? And there are three tax slabs. Okay, if you are in the old income tax provisions, if you take and not the new regime, so there are three tax slabs: 5%, 20 and 30%. And if you invested 1,50,000, if you are in 5% slab, you will get 7,500 rupees as deduction. Okay, tax, you will save this tax directly, 7,500. If you are in 20% slab, you will save 30,000 rupees, and if you are in 30% slab, you will save 45,000 rupees taxes straight away, right? That is the thing. So friends, coming to the conclusion, wherein I would like to tell you that there are a lot of equity linked, that is ELSS mutual funds in the market, friends, right? But I have tried to show you the top, not the top 5, or I would say good 5 mutual funds, based on their returns, right? And so there might be a thing going in your mind how to select good ELSS mutual funds, because there are so many. If you start searching, you will get so many in the internet. I have given you the good 5 returns, but there are a lot of them. So how to select a good ELSS mutual funds, right? What I would like to tell you is you have to keep 2 things in your mind. If you have this, then you can select good mutual fund. What is that? First, see whether the mutual fund has given good returns in the past. That is, in the past 1 year, 3 years and 5 years. See whether the returns are good for your, for whatever you need. Okay, for somebody 10% is good, for somebody 20% is good, right? So see whether that returns given by the mutual fund is good enough for you. Okay, if you are fine, then check the portfolio of companies in which they have invested. Okay, that which I told you, what are the company holdings? Check that. If you are confident that mutual fund has invested in shares of good companies, right? If you are confident about that, then go ahead, you buy those mutual funds. And if you are not, then leave those mutual funds and select some other mutual fund in which you are confident about the companies in which they have invested, right? So that is the 2 things. If you keep this, your investments will be very simple and you can get good returns. Fine friends, so if you have some doubts, I would urge you to rewind the video, watch those important parts again so that you will get the concepts clear in mind. And with that, we come to the end of this video. Thanks for watching. This is C.S. Karthik signing off. Thank you and namaste.